Wealth creation knowledge made simple. Welcome to Family FinServe Investor Academy. And the Family FinServe team wishes each and every one of you a very happy and a prosperous Diwali. Now that you have learned about how to organize your personal and family finances and why budgeting is very critical, let us take the next step forward and understand a simple yet effective cash flow and budgeting system that I personally use. We will be talking about a simple money management concept with the objective to separate all the income that we receive into three different buckets so as to have better control over the three different functions of money: income, spending, and savings and investment. You must have heard about several stories about well known celebrities such as Boris Becker, who's a tennis player, Mike Tyson, a boxing champion, Nicolas Cage, a Hollywood actor, A.K. Hangal, an Indian actor, amongst others, who either did not save enough money to last 20-25 years after they quit working, or they never kept a track of their investments, or they spent huge sums on lavish, unnecessary expenses, or they probably spent more than they earned. And that is how they reached the stage of bankruptcy. Knowing and following some simple personal finance rules, especially the money management concept that I'm going to talk about, would have definitely saved these celebrities from bankruptcy or not having enough corpus. So let's understand how this money management concept works. Very simply, I personally have three different accounts: income, spending, and savings and investing is what I call them. Once my professional income, or let's say your salary, your business income, or any other income, it could be gifts, Diwali bonus, Diwali gifts, tax refunds, etc., hits my account, within the first hour or so, I make it a point to transfer. You can also give standing instructions to your bank to automate this process and have a seamless transfer. So what I do, I transfer 20% immediately to my investing account. All my investments happen through this account only, namely SIPs, recurring deposits, fixed deposits, etc. After this transfer, the next 30% is transferred to my spending account, which is primarily for fulfilling my wants, namely hobbies, entertainment, shopping expenses, etc. And the remaining 50% of the take home will stay in your income account for all your needs, which are primarily the day to day expenses that would be required to sustain my household and my family life. Now, what you need to understand is that the money management concept and this simple cash flow statement, it is just a framework to manage your money better throughout your life. It is absolutely not rigid in nature. What I mean by this is that you can start by investing 10% in your investing account and gradually increase it to 20% or more over the next 1 or 2 years as you get comfortable with this system. But wait, for this system to work properly for you, I would recommend that you first implement this system as a pilot for the first 3 months. Find out the amounts that you need to transfer to you, especially your spending accounts, so that you understand your own spending patterns. And this is something most of us have never ever done even in our lifetime until date, and may take some time to adapt. Find out the amount to go into investing accounts, and you can do this through a very good tool, monthly expense tracker and budgeting, which I have shared in the description below. If during these 3 months you are consistently going over limits in terms of spending or are not left with any money, you need to relook at where your money is actually going. Whether it's eating out, movies, buying gadgets, impulse purchases, these are all the primary reasons. And in case you are consistently overshooting your spending, then I suggest you utilize what I call the Moscow technique for any purchases you make, especially any impulse purchases. Now, what does Moscow stand for? M stands for must have this, which means this is the basic necessity. S stands for should have this if it is feasible and possible. C stands for could have this if it's not affecting any other aspects of your financial life. And W stands for would like to have this at a later stage if it is feasible. Once you get a hang of this complete system and the Moscow technique in the next 3 months, you will start getting comfortable, and this money management concept will now start working really, really well for you. You will understand your spending patterns, what is going on with your money life. And once you do this exercise for the next 3 months, chances are you will start consciously questioning your spending and will also get to know how much your saving and investing capacity is. But there is one very strict rule that I follow for this money management concept to work. And it works well really for me. And so that it can become an effective cash flow system. And the rule is very simple. I never move money from my investing account to my spending account or income account during the month. Now that you have organized your personal and family finance and started taking control of your personal finances, stay tuned for the next step, which is to protect yourself and your family from emergencies, medical contingencies, and ensure that your finances are not inordinately impacted. Thank you for watching, and for more such interesting and simple videos on basics of personal finance, subscribe to our channel. Thank you.